The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Don't forget, check us out online, TFNN.com, Tiger TV, 9 hours of live trader commentary a day, if you're away from your computer, check us out on your mobile phone at TFNN.mobi. And so you can listen in and catch up on where the markets are at. So right now, where are the markets? We got the S&P is up at 5.75. We got the Russell up around 5.75 points. We got the Russell up 4 points. The Nasdaq is up about 17 points on the day, with the Dow up 48. And pushing on those highs, not quite breaking through them all. Let's see, looking over at copper. We got copper right now down about 0.5%. We got gold about up 0.5%, up about 5 points right now. Silver is currently up about 0.5% as well. Natural gas, a very quiet day. After all the big movements, we've been having those 9 and 10% moves. So after a lot of big movements, seeing that happen and looking at it all. Looking over at oil. We got oil right now is currently down 45 cents on the day. We got corn down at a couple points. We have soybeans moving on up, rocking up over 1%, 15 points right now. We got euro dollar currently up 23 pips. We got Aussie dollar down 5. Pound dollar up 17. Dollar CAD down 24. Dollar CAD's up 8 pips. US yen is down 28. Aussie yen is down 22. Euro yen is down 15. Pound yen moving decently, down 38 pips on the day. Not a massive move for pound yen, but still at least a good enough move to take advantage of. And we got the euro pip, euro pip there. The euro pound is currently up 9 pips on the day. And that sort of shows us where we're at, and like I said, gets us caught up across the board on just a lot of different trades that you may want to be looking at, paying attention to. Just knowing where the markets are at. Obviously, it's been pretty quiet lately, and just trying to see, what all is available that you can take advantage of when you're looking at these different trades. And I like to trade them on Nadex. Flat days or volatile days, either one, give you plenty of opportunities to trade on Nadex. So, it's one of those things. But that's why you want to have more than one play in your playbook. A football team doesn't just have Hail Marys and that's it. So they also, have, they know how to run the ball. They have short passes. They have, kicking field goals, all that stuff. And so you want to make sure to, have those different plays for different days. For different things that are happening, the last couple days here we're going on, just sort of a semi-choppy markets. I mean, like I said, there are some trends, but they're not as massive, and so you want to know how to take advantage of those different things and not just have just one strategy and not know what else to do. All right, so with all that, let's check out where gold is right now, because it's looking like it's starting to turn over. Sort of have a short expectation on it, and I just want to see what we have that might work. Potentially, we're at 1333.3.4 right now. If the momentum continues, how far down could we go? Like I said, we're just now starting to get some down momentum on it. And, is that a realistic thing? Is there any kind of magnet price that'd be pulling us on down there? And so let's pull that up. We'll check it out. And we'll see if there's any kind of expectation that would lead us to think that might be a good trade to do. And I'm going to open up a chart here in just a moment for you. Pulling it over. And what we'll do is look at 10-minute bars over on gold and see if there's any kind of magnet volume that I think has the potential to pull us down here into the close on volume. And if it does, then my target would be 1133. Okay, right there. So I'd be looking at selling that contract. Okay, right now we can get into it for about 53 bucks at the moment. Like I said, we're starting to have a little pullback here. I got a short expectation just seasonally on the market, and so I'm watching it as we go into the end of this hour. But it looks like we could move on down. So we've already moved up a few pips, but move on down to close to around 1131, since we already moved up from the high of this hour, 1134 on up to about 5 ticks, so maybe about 5 ticks above that. So that about 1132 would be a reasonable expectation on that trade and for that down move. Okay, so hopefully you got that. Like I said, again, that's a 1333 130 potential expiration trade, and going in on that one with the move that's happening right now. And like I said, now I want to go ahead and also open up for you a potential chart just to look at 10-minute bars to see what possibilities are there. So I'll open up a gold chart for you. We're going to check it out. We're going to pull up just 10 minutes, and we'll add some other details to the chart to give us some expectations. But the main thing I want is just to look at volume overall. And let's see here. If I go into this, and then, okay, there we go. Now I got one. Now I just need to flip it over. So give me 1 second. Okay. So with all this data, basically you gotta filter through it all and see what we got. But I want to put that ticket up so you can see it as a potential sell that we're looking at. That's small cap. Let me get gold for you. There we go. Okay. So potential sell. Big thing though that I want to focus on is looking at expectations on 10-minute bars and going short on that trade right now. But how far down do I think it can move here in the next hour? And not even an hour, really just the next 30 minutes. And so I can go in, I'll get rid of a couple pieces, and I'm going to make this a lot smaller. I bring it down to 30 minutes. That'll let me have a little more realistic expectation. Like I said, short the 1333 1:30 p.m. expiration trade. And okay, that cleans everything up quite a bit. And then now just looking at high volume bars. Let's see, there's my high volume bar. Look at that. Right there. So right there, 1130.5 is as far down as we actually could expect it to go. So I definitely like that trade. I'm in that trade as a potential down move, and we are moving on down. We may get down there even faster. And you see, we're staying within the expectations pretty well on most hours. We may hit a little resistance right here around 1132. I'm going to move this chart out of the way so it doesn't keep popping up in the background. Right around 1132. But like I said, we're going into the end of the day, so I won't be completely surprised if we break the expected move here at the end of the day. And could even go on maybe and add just expected range for 10 minutes. Actually, I guess I still need 30 minutes no matter what I do. So let me pull up one more chart for you. And I just want you to be able to follow along on this one. So we're already up about $10 on that trade. And let's see here. There we go. All right. With that piece, there we go. That's what I was trying to pull up. I'll drag that over here. We'll shrink this down a little bit. Bring this in. And see what kind of movement do we expect here in the next 30 minutes. So I'm going to change this to 30-minute chart. And well, we can look at I guess while we're at it, we'll go ahead and look at the 1 hour. The 1 hour, we expect about 3 points, high to low. Like I said, we may run into a little resistance right there at 1132. And then, but let's look at it even tighter. Let's see, how much further distance is it? We're 1.6 in, so that gives us basically 1 more point to go from where we are right now, which would bring us into about 1131.5 on an hour right here. Okay, so 1131.5. And then this right here would be our magnet price of where we expect that the market could move towards. And now we're going to go in and we're going to check out our 10-minute bars. Or sorry, 30-minute bars. And okay, so we're pretty much near the maximum expectation on the hour, the high to low. Volume is pretty low going into it at the moment, but we're expectation is really only 1.8. We're actually or 1.97, so basically about 2 points, and we're at about 1.8 right now. Notice we've slowed down a little bit, and we'll see if we can keep with that movement. And what we've done is we've sold. Okay, we've sold the 1133s right here. So I'll draw another line. There you go. All right, so basically what we're saying is we can expire at or below that price. That's what would be required for the trade to actually be profitable. That expires at or below 1133. And my only caution on it, so I definitely would be willing to hop out of the trade. If we get closer and closer, and I'm not seeing a continued downward movement. So I'm hoping that we'll break out of this expectation, and what we can do to help ourselves to sort of see, hey, what happens historically on this? Is this even a reasonable possibility that we'd think that it might actually go through and break out of that expectation? So we'll shrink down over here, and I'm going to expand this out. And just go back and look at the end of day on gold. So right there at 130. And let's see what we get. So we got 130 yesterday, 130 this day. Okay, we had expected 2.3. We got 2.7. All right, what about day before that? Just go in and just start looking at, we got Sunday there, but we'll go in here, 130. Okay, we had 2.3, we got 3.7, so we did get an extra point. Okay, and end of day, do I consistently break maybe the expectation? That just helps us have, either more or less confidence in the ability of it to keep pushing through. And so did it again, it looks like, right there. Yep, we got just a little over, a couple ticks over the expected range. So, all right, we'll stay there. We'll be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a license to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. So we're just watching this gold trade, looking at it, and we're really pushing on that expected range. For the last hour here, we said that it's not uncommon to break the expected high to low range, but we're pretty much right at it. So, I mean, we have an expected range of basically 1.97, so round it, you got 2. Actual range of 2. So we're right at that range, so we need to break it or else we're going to pull back on in there. We got about 6 minutes left for it to potentially go lower, okay, or stay lower. Again, as long as it settles at 1333 or lower, then we're fine on the trade. Settlement is based on the average of the last 25 trades, okay? And they look at the middle 15. So if we were pulling up and looking at, say, a time and sells report, let me show you this. Then we'll get time and sells. Let me get rid of the active trader over here. All right, so I just got to think of swim up. I mean, you can use Ninja, you can use whatever. I always usually have a couple platforms. So they're basically going to be looking at the last 25 trades going on, and then that's actually what they're always going to be doing. They'll take out the 5 high and the 5 low, average the middle 15. So it's a good idea to keep an eye on that. If it's too close when you get close to expiration, it's not worth being in the trade. Okay, and we only have, like I said, 5 minutes left. So, you just... The whole point here, I mean, you don't want to end up in that last 2 minutes, and here's the reason why I talk about the last 2 minutes. In the last 2 minutes, the liquidity sort of dries up, okay? Market makers pull their quotes. Other traders could take the other side of your trades. It's not a lockout period, okay? It's just more of a dark zone, meaning the liquidity is not as abundant during that time. And so, you want to use caution and, 4 to 3 minutes till expiration. If you're not comfortable with holding on to this thing for 2 minutes with a low possibility of being able to get out, then you definitely want to be out of the trade. Okay, so just keep that in mind as you're doing these types of trades when it comes that close to expiration. And you may go, you know what, I'm up, I'm happy, I'm done, I'm out, whatever. And so, I'm watching the time and sells just to sort of see where that's printing at. And let's see, I could even get rid of the chart because I already have a chart up. Tighten that up and go, okay, so we're sort of, we're ticking lower. That's good, making a decent profit on the trade over here. So we're up. Let's see if we can bring this in. Right there, trying to bring a lot of information onto one screen for you. But, so we're up about $135 on the trade right now. You got basically about a minute or so until we're like in the final minutes of the dark zone. We got about a 0.7 range here, but if we go into those last 2 minutes, okay, then it could definitely hurt. And so you may want to go, you know what, we're at $18 right now. I'm up $165 on the trade. I'm up 170, I'm up this, whatever. It really depends upon these final ticks. But you could definitely close the trade out now, and you got a nice profit on it, and I don't think you're going to be too happy. If you didn't close the trade out, you're in it. You're stuck. Okay? So it's good to see sort of what happens on that. It can be a little more nerve-wracking because now it has to. It's going to be very difficult for you to get out. See, there's not any liquidity in these last couple minutes. So now it has to stay below 1133, at or below 1133 as of expiration. Before, you could have got out and locked in about we had about $170 profit there, I think, at one point, that you could have locked in on the trade without having to worry about it at all. So at this point, there's somebody trying to buy at 63, so, you could buy that out, but, it's dropping. So, I wouldn't be buying from them. There it goes. So dropping on down. Look at that. We just hit the that low expected range on the hour. Okay. Let's see if we go down. We hit that magnet price. That's what we're really targeting. That's by the end of the hour, but a lot of times we hit that earlier than the hour is over. But 1130.5 is our 1130.6, I guess, actually is our target. And a lot of people trying to hop in now. Looks like a little bit late to the game, but anyway. So current price is I got in. And this will mess you up because you'll see this and you'll think like you're just getting nailed because there's really no liquidity. So like it's showing $45. That binary is not worth $45. It's it's in the money. All right. So it is not worth that price. And so you really can't pay attention to P&L in the last 2 minutes because the liquidity isn't there and they're calculating P&L based on whatever's quoted. So without those quotes there's just not much to really take advantage of at the moment. All right, stay there. We'll be right back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. And so our position settled in the money. Did great. It was moving on down there really strong into the close. And worked out well. So, just a trade recap for you on what happened. We got in the trade, and just depending upon exactly when you hit the execute button, you had plenty of time. That thing ranged around quite a bit. And so got in. I sold 5 contracts at $51. Okay. And so if I go over and I grab a little calculator right here, so 5 times 51. So that's $255 potential profit. And my risk on the trade, okay, would have been the difference between the maximum value, which is $100 a contract, times 5. So less my profit potential on $245 of risk. So I can make $255 on $245. And anyway, so that's the trade. We got in. We got in at time of, let's see, it'll have an execution time on here somewhere. All right, at 1:12. Okay, live account. So 1:12 right there. And then go on over here. And position settled right there at 1:30. It settled at a price of 1331.84. And your position must settle at, or if you hold, remember, we didn't have to hold. There was plenty of times we could have closed, but profitably. It was doing well. But if you held right to expiration, it had to expire, settle at a price at or less than. And it's really important to get the at down because people forget that. They don't have like pushes, okay? So if you bought, it has to be greater than the strike. If you sold, at or less than the strike has to be your settlement. And it can come down to a tenth of a tick, okay? In this case, we were, a little over a point, almost 12 ticks there in the money as of expiration, as of 1:30, so 18 minutes later. The payout amount was $500, and that could be a little confusing, at first when you get these first payouts. What happened was that they took $245 out of your account because that was your risk. You don't ever get margin called. You put at max risk. You don't have to ever worry about risk increasing. You can't get stopped out. I mean, you can choose to get out, but, you don't have to worry about the stop out. And we were on a 1-to-1 trade. So $245 came out of my account balance, okay? And then when the trade, if I closed the trade, then there would have been a credit. But since I held the trade, there's also a credit. And the payout amount can sort of make you think more than is really there. So we had minus $245, and then we had plus $500, okay? Because I got all my risk back, plus I took full profit on the trade, so I got the $255 back, and that's why it says payout amount $500. So my profit was $255 on the trade. Okay, so not a bad rate, like I said, for about 18 minutes. I'm just going in and doing a quick premium collection trade. I was looking at the market starting to pull back down. I was looking at expected range. I looked at the expected range on hour and on 30 minutes. I'm like, okay, this is realistic. And then I also looked at the magnet price. I'm like, hey, I think it's going to try to pull down right here to about 11:30. I don't know if it's going to get there in time within this hour. Like, I didn't expect that to happen. But within that 30 minutes, because we only had the contract expires at 1:30, because that's when gold pit closes. And so I'm like, it probably won't get down to that. It'll shoot for that. And but the market's definitely moving down. Let's go ahead. Let's short. The only decent short available on the list was at the money. And so since I had the expectations and everything in my favor, I saw the momentum in my favor. Then I grabbed the trade. And, you got 1 minute, 2 minute, 3 minute, 4 minute. So that's what this little thing right here. And looking at all four of them, pointing down, and just the price activity pointing down and busting through the range. And we actually did hit the range perfectly. So that's what we were going for, and it worked out. So it's always nice when the plan comes together, right? And let's see here. Okay, so now let's look at one other thing to show you something else. I was looking at expected movement, in an hour. Close all that down. There we go. Okay, so expected movement in an hour and in 30 minutes. I was comparing both of them. And we'll bring this one up a little bit. There we go. So this is 30 minutes and this is 1 hour. And then I'll zoom in, make it even more visible. And we had basically a 1 hour expected movement of 2.5 points. We actually had 3.6. We exceeded it. We exceeded that with a volume expectation for this hour for this day of the week. Okay, this is how much volume I expect to happen on Wednesday in the 1 to 2 o'clock time frame. Okay, so just for Wednesday. And it'll be different for Wednesday tomorrow. And we had expectation of 2,400 in volume. We had 2,620, which explains why we exceeded our range, because our volume exceeded the expectation. Therefore, the price also exceeded the high to low range. And as far as in the 30 minutes, we had an expectation of high to low of... we got to take this back here. Make sure we're looking at the right one. We had an expect, because this is the current 30-minute hour. So in the 30 minutes, in the 1:30, so 1 to 1:30 Eastern time there, we had an expectation of 2.1 ticks in movement. We actually got 3.1. Again, should we be surprised? No, because we had a expected volume of 1,700 contracts traded in those last 30 minutes, and we had 2,100. So since the volume exceeded it, the price also exceeded it, giving us further confidence to stay in that trade as it was moving down. And we got to watch it just drop like a rock there right at the end. So, which is awesome when that happens. And it's been a while since I did a live trade, and I was just wrapping some stuff up with some other traders, and I'm like, yeah, let's do a trade. So you can see that's where we got in, and I mean, you just look at that perfect, just bam, 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 and using all those expectations. So I had an expectation to this point on the 30 minutes. I had an expectation to this point on the 1 hour. So I basically just plotted those same lines over there. And like as you can see, we busted through all those. And then I had expectations the market would move down to this price. The Globex is still going. And so you can see, not the pit, but the Globex, and look at where it came right down to. And we're basically, that's, let's see, 1130.5, may even be a little bit lower than what I should say it is. But we've actually now beat the expectation on that. This was the, this wasn't the expectation. This was the magnet price. So I need to label my lines, right? So, as we got in at this level, we wanted to expire below here. So let me get rid of that line, because that's just where we got short. We wanted to stay below 1133. This is where I expected it to get to on the hour, and it actually hit that and exceeded it. This is the magnet price that I figured would actually be pulling the market down as we started seeing that negative volume. And I got that from the bar at, let's see here, we got 840. So at 840 this morning, high volume bar, we had 4,300 contracts traded. I went in, looking at that movement down. I looked at the low of that bar. The low of that bar was, let's see, 1130.6. It was also, let's see, open, close, there we go. Yeah, it was a down closed bar. Maybe a little hard to see because that's the only issue with open, high, low, close. But it's pretty close together. There we go. All right, now you can see a little bit easier. Make it even wider. So down closed bar. That was our high volume bar. So we are looking at a magnet order of a target price at the low of that bar, which was 1330.6. It hit that and pulled back up. It's moving up, and then sort of oscillated around it. Hadn't been able to break through with any kind of significant volume. Ran up. It's actually established pretty close to getting to a magnet price up here, up at 36.4, and started running back down. Where's it going to go? It's going to go right here to this magnet price. What does it do? It's on it right now to the tick, just sitting there. And then where are we at on the expected range within the hour? We are right above it with that exceeded volume that we had right there at the end in the last 30 minutes. We had an expected range of only 2.9 points. We got 3.8, again, with exceeding our expecting volume. So we did target that. We just had to be mindful that that target, that magnet, was going to, outside of our expected move in the first 30 minutes. That's why I didn't want to do like an out of the money. Otherwise, I would have chose maybe an out of the money contract and sold it for pretty, like maybe $80 potential profit there. Wouldn't have held it. Would have closed it when it hit the magnet. And you see why. Because it hits it and then pop, right back off of it. Okay? And that's just an explanation of the trade. I hope that helps some of, what did I do and why did I do it. But let's see, US Tech 100. I got a request over in the Tiger Den over here. So, yeah, I'll pull that up. We'll analyze it. We'll walk through it and see what we can find. And let's see, get this over here, pull up the Nadex. I'm assuming, obviously you're meaning, US Tech, so you're talking about the Nasdaq. Okay, versus a Qs. And then, let's see, we'll update a couple things. Put that over there. We'll grab this. And check out what we got here. Let me open up one more piece of analysis, see where we're at. A few different things together. so I can try to get the whole picture. Okay? Let's back up. We'll got to get rid of some of our drawings. The drawings carry over here. And check it out. Obviously, right now we're trending up, and we're actually at the high of the expected range. We're even busting through it some. The current hour. And one more second, and once the charts update, you gotta have patience. I got to pull a lot of data at one time. Then we'll go in and we'll analyze that step by step for you. But yeah, right now we are pushing pretty high on the expectation of movement. As far as volume bars, it's going to be, I can't tell you right now, it's going to be hard to establish a magnet price. And let's see. Sorry, I'm trying to figure out why I'm getting a little red arrow. There we go. Okay. Okay, the difficulty on establishing a magnet price over here is going to be, because we're bumping on these highs, let me look over at a NASDAQ. Calling a higher high of an all-time high is pretty, that's more of a Gartley butterfly method. I'd be leaving that to the masters on that. But let me see here. Let me see what we got. I don't give up easily. All right, let's see. Okay. First, I want to just look at daily bars. See where we're at. So since we're not pushing that, we ought to be able to find some over the last few days here on the NASDAQ. Oh, that's natural gas. There we go. Whoops. It does make a difference. Okay, yeah. We're way up there. Let's back off. Look at weeklies. And let's pull it back even further just to make sure, but I'm pretty sure. But what I want to do is make sure that I'm looking at all the data I can get there. Yeah, okay. So that's what I need to consider is we're right at the high. All right, so now that we got that established, I just wanted to make sure we're there. But, I mean, we're bumping right off the high right now. Next thing I'm going to do is I'm going to go in and pull up a chart with my deviation levels on it. And what that's going to do for me is let me know how far am I into my expectation on the move today. It looks like I am currently sitting right at one deviation from the low. I may be at 0.7, but from the low to where we're at right now, right at one deviation. So we're really on that expansion, contraction zone right now. We're at a major resistance level. All right, stay right there. We'll look back at it a little bit more when we get back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So I had a request to go through and just sort of look and see what we can find as far as expectations of where the market, NASDAQ may retrace back to. And so again, sort of looking over here for some high volume bars, seeing what all we can see. And then backing back down. Going, okay, what do we got right here? We have this high volume bar. That was an up close. That's 36.84. We have this high volume bar. That's 36.90. So let's see, 36.84, 36.90. Both up closes. Okay, so now we got that established. Now, right now we're at a 1 deviation level, which means that, over 70%, like really it's about 70%, but it may exceed it, but 70% of the time, greater than 70% of the time, it will actually expire within it. So that's more of a touch deviation level. But we're really at the expansion point. We're at the expansion point on 30 minutes, on 1 hour, on we've actually blown past it a little bit on 1 hour. We're right above it here. Here's an hour time frame. You can see we're a little above that zone. I went ahead and put it on 4 hours so I could see to the end of the day. And we're literally sitting right at the maximum expected move on the day. So there would be I would have a high expectation of a reversal. I'd want to see some sort of price action, something, before I just hop in. The one thing I did get to recently that we did get to see, but we haven't seen a pullback on it yet, okay, is we did actually see a pull it back down here. Maybe I can load that up. We got a volume spike over here on the 5-minute bars. Actually, yeah, so on the 5 minutes. And we got it within that 0.7 deviation zone. So I like the fact that we got a volume spike. I like the fact that it's at a deviation zone. I need a retracement back before I would be willing to hop into it. I need to break the low of that bar. So like right there, there's my big volume bar, volume bar spike, whatever. Volume spike bar happened right there. I really need to see it break below, at a minimum, below the low of this bar. So I'd be looking at a break below 37.01 by at least a tick, okay? Before I'd expect any kind of movement back. And that'd be not necessarily a complete retracement. That'd be, maybe a choppy movement back, or, it could just fly back, but I wouldn't necessarily have it'd be more of a neutral trade. I'd be more likely to sell a strike right above the high here of 37.04 than I would to do anything else. That'd be like if I saw it break below that would actually be my trade, is selling a strike right above that level. As far as being able to pull back, question that came in was, I was looking at a 36.80 strike. That would be expecting the market to basically pull back twice the expected move in the next 4 hours. So, if you're tired, well, not twice, but about 150% of the expected move in the next 4 hours, because you'd be expecting it to pull back to here and then further down to here, and that would be a range of, let's see, what do we got? 36.80, so 9 points on that. Okay, and our expected move is, let's see here if we can get that, or if it's sort of, let's see, what do we got the expected move? I have that up on another chart. Let's see here, and open that over here for you. Yeah, so our expected move is really, it's way too big of a pullback. You'd be looking for just a massive pullback. So what I would be looking at, the further, probably honestly, if I was going to go a reversal, I'd wait on a break below, and I'd be looking more at 36.90 than 36.80. I need to look at the exact strikes for you. I won't quite have to get in the den, but that strike right there has a very, very low probability of being hit before 4:15. All right, y'all have a great day, and I'll see you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.